I'm interested in what you're seeing in the opposing dynamics. We've just seen a slight cool down in mortgage applications. Is that because, well, prices just got too high for real estate?
You know, we're seeing it across the board. You know, I think prices are definitely going up, but rates are still so low. So we haven't seen a big slowdown. We actually had a great second quarter. We think the third quarter is going to be even better at UWM. And so we're excited about what's going on. I think the slowdown is there's obviously a little lack of inventory out there. People that are in forbearance aren't selling their homes. And so as that comes out, I think the market's going to stay hot through the end of the year.
Give us a little sense here, though, Matt, as to sort of what the breakdown in the types of mortgages that you're seeing. Are these basically people coming in, getting buying a home for the first time with a 30-year? Are these refinancings? What are you seeing?
It's a good mixture. You know, as rates tick up, and they did in the second quarter, they're kind of come down a little bit lately, but as they tick up, there'll be a lot less refinances. And so companies that are reliant on only refinance, you'll see a lot less of that. We're seeing a lot of purchase. We had an all-time record purchase quarter. We're going to continue to grow in the purchase. So purchase is, you know, I won't say cycle-proof, but a lot less cyclical than the refinance. And so we're seeing a lot more purchase than refi, definitely from second quarter, first quarter. And we think the third quarter, we're going to see a lot of purchase. But with rates ticking down, you know, FHFA just reduced a fee, which is actually helping spur refinances. And so mortgage brokers across the country are getting busier right now. So we might see even more business on the refi than we thought after that recent change.
Why are you so positive on the third quarter, Matt? Why are people going to still be going out there and buying new homes?
You know, because there's a lot of opportunity. Rates are very low. And the truth is, people see homes differently than they saw pre-pandemic. And so since COVID, we're seeing a lot more people realize that, hey, buying a house with maybe a couple extra bedrooms or maybe with a little bit of yard matters more. Home is something different than it did pre-pandemic. And so we've seen a lot more purchase than I think a lot of the reports are showing. And so it's been very good. And obviously we work with mortgage brokers who are local in the community. And so we have a little bit more of a, you know, in the weeds approach, and we feel that right now. And so purchase has been great. I see it continuing. Rates are low. Housing is gonna continue to be strong. It might not go up 10% a year, but it's not gonna go down, you know, or go down significantly. We see it being very strong going forward.
All right, let's talk about your business, though. I mean, obviously, this has attracted a lot of folks to this industry. I mean, you are obviously one of the dominant wholesalers out there in the mortgage market. I think Quicken is the only one even bigger than you. But you got a lot of competition out there from Freedom and Wells Fargo and a lot of others here. How is that affecting your pricing power, your margins right now?
Yeah, so we are the leader. We're the #1 wholesale lender, so we are bigger than Quicken, bigger than everyone else. We're the #2 overall, and so we have a lot of control on pricing. And as we've basically said, hey, listen, we want to make sure consumers get great deals across the board while still making money for our investors and making sure we're looking out for our shareholders. And you're going to see that in our second quarter earnings, along with hopefully third quarter and beyond. And so definitely there's some pressure as there's less mortgages being done. People compete harder, but we have a big advantage based on our technology and our cost to originate. And so what you'll see is a lot of mortgage companies look really good when rates are low. We think we're the elite mortgage companies in all cycles, especially as rates tick up.
And I didn't mean to shortchange Matt and the size of his company.
Oh, no,
he is a Michigan
right.
State guy, and being from Northwestern, you know, I couldn't help but take him down a peg.
Yeah, at a safe distance, Romaine, at a safe distance. Meanwhile, Matt, though, talk to us about, you talk about your technology, and what's so interesting is the way in which people are trying to disrupt the mortgage industry. What we learned in COVID is things can be done differently, but I've just signed a mortgage and it felt really archaic. You had to go in person, you had to sign, I had to give over, you know, signing rights to a husband. Why can't we do more of this online? Why do you still have to gather in an office, sign your name away? Are we seeing innovation keep pace with the amount that deals need to be done?
Yeah, so honestly, I think you're just working with the wrong people. You got to go to findamortgagebroker.com because it's all tech, it's all simple. We're closing loans in 7, 8, 9, 10 days all the time. Purchase, refi. I think our average at the company is about 17 days. The industry is 50. So other people might be archaic, but we are not archaic at UWM. Mortgage brokers are not archaic. They are in the weeds. They have great technology. The process, nobody, like, it's interesting. We have a mortgage business. Nobody wants a mortgage. They want the house or they want the savings. We have to make the process faster, easier, cheaper. That's what mortgage brokers do. That's what UWM is doing. And that's how we're differentiating. And that's why we're growing so fast while others maybe aren't.
All right, talk to us a bit here about the regulatory environment, Matt. Obviously, a different regime in Washington now, a regime that has actually talked about potentially tightening regulations specifically for the mortgage industry. Are you anticipating any significant changes on that front?
You know, we really aren't. You know, I'm all for any regulation. You know, we're a big company. People think we don't want regulation. We see regulation as a positive. Anything that's good for consumers helps mortgage brokers. If it helps mortgage brokers, it helps UWM. So if the Biden administration comes down and tightens some things down, it's going to help us win long term. But I don't see anything coming down the, down the pike right now. We saw a loosening, as in lowering rates with the FHFA fee by Sandra Thompson leading that group. And so that's positive for all of mortgage people across the board. So we think it's all good going forward. Second half of the year is going to be better than the first half. And the first half was an all-time record. And so we're excited about the second half and then leading into 2022.
Did you ring the closing bell today?
Yeah, we got a chance. We had 75 of our clients out here. So we had them out here ringing the bell, having a lot of fun, educating people about mortgage brokers. A lot of fun here today.